Hello traders, welcome back to another episode. This is your brother Jamal at FOREXSOM. Alright, today's video is going to be about market structure. And sorry guys, I haven't recorded a video in about a week and a half now. I wasn't feeling good, I was under the weather, but now I feel way better, thanks to God. Alright, so without wasting much of your time, today's video is going to be about a market structure. I'm going to be showing you guys how to spot market structure on an uptrend market and a downtrend market. The market moves in the waves, and if you're not able to identify the proper way when it comes to market structure, you will never be a good trader, or you will never be a profitable trader. So market structure is very crucial when it comes to trading any markets. That is including forex, options, stock market, crypto market. It doesn't matter what market you trade, you have to know how to identify proper market structure. So in this video, we're going to be learning internal and external market structure, uptrend and a downtrend, higher highs, higher lows, lower highs, lower lows for a downtrend, break of structures, change of characters, and everything above. All right. So here we can see that we have an uptrend market structure. The price here creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and then higher high. But when you look at the trend, every impulsive, after the end of the impulsive, there is a mini internal lower highs, lower lows, and then we have an impulse, and then we have lower highs, lower lows, which is the pullback, and then we have an impulse, and then we have lower highs, lower lows, and then we have an impulse. So when you go to the real chart, you're going to be able to identify this. But if you go read the textbooks where they teach forex or any other market, the way they teach it is very simple. So this is what they show you on the textbook. But we wish this is how it was when we go to the real chart. The market doesn't move like this. The market moves in waves, and there's a lot of noise and pullbacks in the market. So this is not what you're going to see when you go to the real chart. This is what you're going to see when you go to the real chart. So make sure you watch the entire episode and make sure you subscribe to the channel. Also, check out my Smart Money Trading ebook. The link is going to be down below in the description. Okay? Without wasting much of your time, we're going to start with this illustration, show you guys how it looks like on an uptrend, and then we're going to go to a downtrend, and then after that we're going to go to the real chart and show you guys how it looks like on a real chart. Okay, so here we have lower lows, we have higher highs, higher lows. So this is the bottom. Okay, this is the bottom. So since this is the bottom, we call this the lower low. Okay, and then lower low, and then we have a higher high, and then we have an internal market structure which is creating lower highs, lower lows. So if you look at this internal market structure, is basically creating lower highs, lower lows. Okay, until we have a fully developed pullback, which is this entire move here. So this is the impulse, and this is the pullback, which gives you on the lower time frame lower highs, lower lows. So let's say this is the higher time frame, like the 4 hours. Okay, but when you go to the 1 hour time frame, when the pullback begins, this is what you're gonna see. You're gonna see the price creating lower highs and lower lows, and this is where a lot of traders get confused because they cannot identify what's going on the higher time frame, and they think that on the lower time frame the market is in a downtrend. But reality is the market is not in a downtrend. This is just a pullback of the higher time frame, like the 4 hours or the daily. All right, so once the price aligns with some type of supply zone here, demand zone here, the price gives you what they call a change of character. So where is that change of character? The change of character happens over here. And what is a change of character? A change of character literally means a reversal. This is a name that was given by someone else. So someone else named this a change of character, right? So, but you can call this a reversal. You can call this, a market shift. You can call it any other name that you desire. So don't get confused by the names. It is very, very simple. So let's say the price here, this is the external market structure, which is, an impulse, and then the price on the lower time frame creating lower highs, lower lows. And once the price taps on what you call a valid demand zone, it basically gives you a change of character on the lower time frame. All right, so the lower time frame is here. This is your last lower high led to lower low. Once the price taps on a valid demand zone, what happens is the last lower high led to lower low will basically be violated, and the price is going to create what they call a change of character. Okay, so once we have that change of character, and now again we have another impulse. Okay, once we get this impulse, this is called an external impulse. All right, let's say this is the 4 hours again, and then on the lower time frame, if you go to the 1 hour time frame, once we have a valid pullback here, the price will give you what they call a lower high, lower low, and it's going to look like a downtrend move. Okay, so on the lower time frame, this is how it's going to look like: lower highs, lower lows, lower highs, lower lows. But reality is, this is just a pullback that is trying to realign with the higher time frame trend. On the higher time frame, the price is an uptrend. So now the price is going to continue, go all the way down here, and then find a valid demand zone again around somewhere on the higher low before the higher high, before this break of structure happened. Okay, so once the price finds this level where it can realign with the higher time frame trend, the price is going to basically violate the last lower high led to lower low and give you what they call another change of character. Without having this change of character on the lower time frame, you don't have a reversal. Okay, we don't have a reversal. A reversal will only happen when you have an identification of change of character or a reversal. So let's say this is the high time frame uptrend, and then price created lower highs, lower lows. Price created lower highs, lower lows, tapping on a valid demand zone, and now we have a change of character. All right, once we get this change of character, we can identify that on the lower time frame the price now is realigning with the higher time frame trend. All right, good. So now we have another impulse from here to here. We have another impulse breaking the last and higher highs. Okay, this identifies that the last higher high was basically taken out, and now we have another break of a structure. Whenever the price breaks a previous structure, we call this BOS, or you can simply call it break of a structure or breakout or whatever it is that you want to call it. Very simple. Don't focus the names. The names is just something that was given by some guy, okay, or someone. You can name it anything. You can name it a break of structures. You can call it what do you call a breakout. You can call, whatever it is. Okay, it doesn't really matter, but what matters is identifying this on the chart. Okay, knowing whenever you see this type of patterns on the chart, which is higher highs, higher lows, you have to be able to identify where the higher high is, where the higher low is, and where's the higher high is on an uptrend. And then we're gonna go to the downtrend. I'll explain this later on. All right, so now let's just focus this one. Okay, so now we have another impulse. Once this impulse finish after break of this structure, now we have the external. So this is the external and this is the internal. So the internal is basically creating lower highs, lower lows, lower highs, lower lows. Okay, again, I want to emphasize this. Okay, on the higher time frame, this is what's going on, like the 4-hour time frame. Okay, and then this is what's going on the lower time frame, like the 1-hour time frame. You can also trade this. Every pullback you can trade it as long as you know where the higher time frame demand is. Okay, so let's say this is your demand zone here on the higher time frame, this higher low here, but you can also trade this as long as you know where the realignment might occur on the higher time frame. All right, so price creating lower highs, lower lows until it hits this demand zone here. So once the price hits this demand zone, now the price is going to give you another change of character. Okay, another change of character. So what is a change of character? Again, let me try to say this again. A change of character literally means a reversal or a turning point. Price going from downtrend to an uptrend, or from an uptrend to a downtrend. The way the turning point happens, this is called a change of character. All right, so now the price hits this demand zone on this lower time frame pullback, which looks like a lower high, lower low, but reality is this is the actual external impulse on the higher time frame, and this is just an internal move on the lower time frame, the pullback. Okay, so now once the price finds an alignment of a higher time frame demand zone, the price is going to give you that change of character, breaking the last lower high led to lower low, and now giving you a higher high. And then what you do is you basically take your trade around this area here on the lower time frame and then target this zone here. So this is not going to be, like I said previously, this is not a valid high high. A higher high is only valid when it creates a higher low. So if the price creates a higher low, now we have a valid higher high. Okay, so as long as the price doesn't create a higher low, this could be a fake out. The price can simply do this. Okay, fake out on this structure, take out all the liquidity that's sitting over here, reverse, tap on the higher time frame supply zone and then continue to the downside. So that can happen. So a higher high is not going to be valid until we have a higher low. Like here we have a higher low. So this higher high is confirmed because we have a higher low, and this higher high is confirmed because we have a higher low, but this higher high is not confirmed because we don't have a higher low yet. So always identify that. All right, there's a lot of manipulation that happen in the market, so make sure you don't get trapped by something like this and the price continue to the downside. Always wait for the higher low to get that identification for an uptrend and a lower high for a downtrend. All right, so now that we have this explained on an uptrend market, now I'm gonna go ahead and explain this on a downtrend market. Okay, so on a downtrend market, let me just flip this quickly. Give me 1 second. Let's flip this real quick. All right, so this is what we're going to be looking for on a downtrend price. Okay, like I said, price is going to create high, lower high, lower low. I mean, let's say higher high here. My bad. Higher high. Okay, and then this is going to be your lower low, and then this is going to be your lower high. Okay, and then this is going to be your lower low, and then this is going to be your lower high here, and then this will be your lower low. Anytime we create a lower low or a break in previous structure, we call it lower low. All right, again, this is called your lower high. All right, so now that we have this, what we do is we have a higher high here. Price, this was the highest point of the price. Now price went all the way down, creating a lower low, and then a lower high, and then a lower low, breaking the previous price structure. So here we have this lower low has been violated because the price went down and break the structure. But if you look at this, this is your external structure on the higher time frame, and then on the lower time frame, what you have is a mini higher high, higher low, higher high, higher low. So this is what they call an internal market structure. So on the lower time frame, price does this type of stuff, this type of patterns. So this is the actual pullback of the higher time frame. But when you go to the lower time frame, like the 1 hour or the 50-minute time frame, this is what you're gonna see. But you can also trade this, because a lot of you guys have been asking me, I cannot wait this to happen. It's gonna take a long time. But you can also trade this on the lower time frame as long as you know where the higher time frame is going. Let's say this is your supply zone on the higher time frame. You can trade this to the supply zone as long as you know where the realignment is on the higher time frame. You can trade this on the lower time frame. You can take this pullback. You can take this until you know, and if you know where the higher time frame supply is on a downtrend, so you'll be okay and be safe. All right, so now we have this pullback, you know, finished. But once we hit the higher time frame supply zone, the price is going to give you what is called a change of character. So the change of character will probably happen somewhere here. Okay, again, what is a change of character? A change of character basically means a reversal. Price was going down, created a pullback. Now we have a valid supply zone. Price realigned with the supply zone, and now price broke the last higher low. The last higher low led to higher high, was violated, and now we have a lower low. Now we can take our trade somewhere here on the lower time frame to realign with the higher time frame trend. All right, so this is going to be an aggressive entry, and this is going to be a safe entry. So some traders, once they see the price, you know at the higher time frame supply zone and the lower time frame does this, change of character, the taps on this area, they will take it right away. But the safe traders, what they do is they wait for the change of character for more confirmation. Depending on your strategy, I mainly trade what do you call it? The safe entry. Okay, I take the safe entry most of the time, but sometimes I take this aggressive entry if I have to. All right, according to how things are in the market. All right, so this is the external. This is the internal market structure. This is the internal market structure, which is the lower time frame, higher highs, higher lows, realigned with the higher time frame supply zone, and now the price continues to the downside, breaking this structure here. So once we break this structure, the price created a lower low. Okay, so this is going to be a valid lower low because it created a lower high. So once the price creates a lower high, this is going to be a valid lower low. What we do now is we can see that price created an impulse, which is the external move to the downside, and now we have the internal move to the upside, which is a temporary higher highs, higher lows. So if this is the higher time frame, like the 4 hours or the 1 hour, and the 15 minutes is doing like higher highs, higher lows, a lot of traders might think this is an uptrend market direction, but reality is the price is just trying to realign with the higher time frame trend. So here, once the price finds that area of supply zone, is gonna probably reverse and give you that change of character again. Okay, so here we have a change of character because this is our last higher low led to higher high on the low time frame before the price hit this area of supply zone on the higher time frame. So now we have a change of character, which is literally means a reversal. Again, do not focus the names, just focus on learning the structures itself. Practice, take screenshots, practice, try to draw this on your chart. Try to grab a pen and see if you can draw this by hand. Practice this, let this sink in your mind so that next time when you see this on the chart, you'll be able to identify this. All right, so now price created a lower low, breaking the last previous lower low here, and now we have a break of a structure. What happened after that is price will go back and give you this internal market structure on the lower time frame again, creating higher highs, higher lows. Okay, but always remember, as a trader, you have to know what's going on the higher time frame. If this is the higher time frame, this tells you that the price is going towards the down direction, because this is your last higher low, lower high led to lower low. As long as we are trading between here and here, we are still in a downtrend market on the higher time frame. But on the lower time frame, you can trade this as long as you know where the higher time frame supply zone area is. So once the price taps on this area of supply zone, the price will give you another change of character or a reversal. So if you are an aggressive trader, you will enter here right away, right after the price hits this area of a high time frame supply. Or if you are a safe trader, you can basically wait for the price to give you a change of character on the lower time frame, give you that lower low, and then you enter somewhere here around a lower time frame supply zone. All right, target this area here. Very simple, guys. I hope that you learned something on this illustration. Now we're gonna go to the real chart and show you guys how it looks like on a live market. All right, let me flip this market again. All right, so let's go all the way up to the chart and show you guys how it looks like on an actual chart. All right, I know your time is very limited, so therefore I want to show you guys exactly how it looks like on the high time on the real chart here. So we can see that if you turn this into a line chart, you can see exactly what I was showing you guys on the illustration. You can see there's a lot of noise going on, break of a structure, a lot of noise going on, another higher high, and then lower and a higher low, and then a little bit of chubby over here, and then higher high, and then lower time frame, lower high, lower low, price realigned with a demand zone, and then higher high. Now let me go back to the actual candlestick. All right, so do not worry about what happened over here. Now we're just gonna focus with this structure, and then whatever happened over here. So over here we can see that price is creating high, okay, sorry, lower low, and then now we have a higher high, and now we have a higher low. So this is the external market structure, and this is going to be the internal market structure. Now when you go, well, this is your higher time frame, and the lower time frame, this will give you like lower highs, lower lows, until the price finds this area of demand zone here. So you can see that there is area of demand zone right there. Price taps on this area of a demand zone. If you are an aggressive trader, what you're going to do is you're going to be taking the trade right when it hits this area of higher time frame demand zone, and then target this area here. And if you are a safe trader, you have to wait for that change of character on the lower time frame. Like here on the 4-hour time frame, you can see the change of character. All right, you will use this kind of technique on the lower time frame. So once you identify this on the higher time frame, go to the lower time frame and monitor this pullback here, which is the temporary lower highs to lower lows. You can trade this, like I said, as long as you know where the higher time frame is, where the high time frame direction is. So you know that the higher time frame is an uptrend, So you can always trade this as long as you know where the red zone is, and then exit and then realign with the higher time frame market once the price hits on this area of demand zone. All right, good. All right, now we have another area. The price created a higher high. Okay, the price created a structure here, breaking this structure here. So now this is a pullback on the lower time frame. And how do you know this? If you go to the lower time frame, this will give you lower high, lower low. This is going to be the external market structure, and then this is going to be the internal market structure, which is giving you lower highs, lower lows. All right. So again, price realigned with the higher time frame demand zone. Here we have another entry. You can take this entry here on the lower time frame after you have the change of character on the 15-minute time frame, or the 5-minute, or even the 3-minute time frame. All right. Again, we have another break of a structure here. Okay, price created another high here, but this high is not going to be valid until we have a higher low, which we have it here. So now the price created all the way up, breaking this area of a structure here, and now we can see that price realigned with the higher time frame demand zone here. If you can see, there is a little bit of imbalance going on within this wick. You can see that there's a little bit of imbalance going on within this wick. This wick here did not fill the entire wick here, so there's some type of demand going on here. So therefore, this will be your entry, and then you continue targeting this area here. All right. Again, we have another break of a structure. We can see that we have another break of a structure here. Once we get this break of a structure, what happened after that is we can see price just continue to the upside, creating higher highs, higher lows. But in the meantime, price came back to fill this entire area here. Okay, so you can see this wick is not filled yet, so there's enough demand going on over here. So your entry will be right here, and then target this area there. All right, so now let's evaluate this downtrend market structure and how we can identify the lower highs, lower lows. So here was higher high, higher low, higher high, higher low, higher high, higher low, and then a little bit of higher high, higher low, and then a little bit of higher high, higher low, and then higher high, higher low, and then higher high, and then price reverse to the downside. So this is, if you're confused about the pullback video, pullbacks, you can go to my YouTube videos and watch the video that talks about the pullback. The last video that I created about the pullback, watch it so you'll be able to identify a valid and invalid pullback. All right. So here we can see that price coming all the way down here, creating lower highs, lower lows. So here we have price creating lower highs, lower lows. You have a higher high, and then we have price coming all the way down here, giving us that lower low. And then we have price giving us that lower high and then lower low, breaking this structure here. So this is going to be the impulse of the higher time frame, and this is the lower time frame pullback, which is the temporary uptrend move. And then the price goes all the way down here and then gives you that lower time frame impulse to the upside until price finds this area of this area of supply zone. And now we have another break of a structure here because price created a lower low and then went back to realign with the higher time frame supply zone here. Okay, we can see that this week's not fully mitigated, so therefore there's enough supply going on over here. Now you can sell it right there, targeting the previous lower lows, and now we continue to the downside. All right, now we have another break of a structure here. We have another break of a structure. This is the external move and then the internal move on the lower time frame. Now price went all the way back up to realign with the higher time frame supply here. So this week here, there's a lot of supply here sitting over here. So price went back up to realign with the higher time frame supply. Okay, and now you are going to the downside, targeting this area here. Okay, now we have another break of a structure. We can see that price created another break of structure right here, creating this lower low, and then price created a lower time frame high high, higher low, realigned with the higher time frame supply here. So you can see this wick is not fully mitigated, so there's enough supply sitting over here. Again, price came all the way down here to mitigate this area of supply and then continue to the downside, targeting this area here. All right, so now we have another move to the downside, and now we have another pullback. Okay, once we get this pullback, price is basically testing this entire area here and then continue to the downside. Okay, so now after that we have a change of character to the upside, price creating lower highs, lower lows, and then we have a change of character over here, price literally cutting through this area, and now we have a reversal. Once we get this reversal, how do we find our supply, our demand? So this candle here will be your demand because there's enough demand sitting over here. So now price come down all the way here, realign with the higher time frame demand, and continue to the upside, creating the same cycle, which is the higher high, higher low. So higher high, higher low, higher high, higher low, entry right there again. And then we have another high high, we have another higher low, another higher high, entry right here. If you go to the lower time frame, this is going to be your area of demand zone. So now we have another higher high, breaking this structure here, price going all the way up. This is an invalid pullback because it did not retrace below the previous low of this bullish candle. So if you want to learn about pullback, go watch my latest video about pullback. All right, now the price continues to the upside, creating again higher low and then higher high. Okay, very easy, very simple, not too bad. You always have to know what's going on the higher time frame, be able to identify your internal and external market structures. Okay, so when the market is going up, every impulse that's going towards the direction of the uptrend is called the external, and then any move towards the direction of the downtrend here on the lower time frame is called an internal market structure. Okay, so external, internal, external, internal, external, internal, external, internal, external, internal, and then external, and then we have a change of character. So very simple. Downtrend, you do the same thing. So the price goes all the way down here, gives you that, external, market. Sorry, this is not a valid pullback, my bad. This is what happens when you go a little bit too fast, you kind of miss out. So this is not a valid pullback. Basically, this is an entire move because the high of this bearish candle is still respected. So there's going to be an entire move to the downside, and then price went back all the way up, peeling this area of supply zone, and then price continued to the downside. So this is how you identify uptrend market structure and a downtrend market structure. So guys, if you gain any knowledge from this video, make sure you subscribe to the channel and make sure you share this with your friends. And also, if you want to learn in depth about smart money trading, I have an ebook about 119 pages. The link is going to be in the description down below. Your brother Jamal again. Until next time, peace and love.